Thank you everyone for joining on time. We are expecting a few more participants to join us shortly, and we will begin the session in a minute. Hello everyone, and thank you for joining us today for today's webinar on UAE VAT, recent updates, and the way ahead. Before we get started, please note that you are currently in listen-only mode. If you have any questions during the presentation, feel free to submit them through the question box on your control panel. We will address as many questions as possible during the Q&A at the end of the session or provide written responses if time does not permit. During the session, we will delve into the key changes introduced by UAE government, including recent VAT public clarifications, updates to review processes on the EmaraTax portal, and rollout of e-invoicing. These developments carry significant implications for businesses operating in the region. Our expert speakers will provide a detailed analysis on these changes, covering legal and procedural matters, the introduction and challenges of e-invoicing with UAE Pass, and common issues related to VAT registrations, amendments, and refunds. With this context in mind, I would like to introduce you to our esteemed speaker for today, who will take us through recent updates and impact over the next 45 minutes, following by a quick Q&A round. Mr. Sanjay Chhabria, with over 20 years of experience in indirect taxes across India, Saudi Arabia, UAE, and US sales and UAE tax, is pivotal in managing and expanding Nexdigm services. His expertise includes advising on setups, expansion, ongoing operations, and restructuring. Previously, he worked with multinational firms in diverse industries, enhancing client relationships and operational excellence. Mr. Ankit Nagda is Senior Manager at Nexdigm. He has over 12 years of experience in indirect tax advisory, compliance, litigation, and assisted clients with India's GST and UAE VAT implementation. He supports India and GCC based clients for entire bouquet of GST and VAT related services, respectively. He has worked with multinational firms in financial service sector, enhancing client relationships. We are confident this session will provide you with a clear understanding about the key changes introduced by the UAE. Thank you, Sanjay and Ankit, for joining in. Over to you.
Thanks, Valtika. So to start with, UAE suddenly has picked up a lot more, at least on the way forward and the policies. And they have carved out specifically at least the pathway for we the UAE 2031 vision. It's more on the forward ecosystem, being more imperative to the enhanced government preferences, continue to strengthen the UAE's digital infrastructure and develop maybe uh, things with the latest technologies. So you will see a lot more actually happening in this area, and we are, at least from the consultant's perspective, seeing all these developments going through piece by piece in every segment. So in this webinar, we will specifically talk on maybe Ankit on the next slide on the e-invoicing. While there's not much of data available, whatever we were able to at least get hands-on through the FTAs and maybe whatever is published in the public forum, and maybe through people, some of the peoples that we actually are working along. We will try and see how much we can answer and give you those relevant extracts. There have been changes in the recent public clarifications and maybe some suggestions and things. We will try and touch upon that, and maybe also on the pointers on reconsideration and waiver business activity issues and the refunds. So moving on to the first topic, which is e-invoicing, a lot of people's favorite, and maybe because there's confusion that what are we, supposed to do. So this specific initiative was maybe in line with the UAE 2031 vision, just to get a lot of latest technologies. And the UAE cabinet did approve this e-invoicing program, just to bring in the methods specifically in place. This is more focused on getting the VAT compliances, or maximize the compliance and shrink the tax gap, make it more effective, or increase transparency and improve more audits around it, enhance taxpayers experience, digitize a lot of reporting compliances, maybe reduce human intervention in certain cases, and look at more efficiency and optimize the cost wherever required. So next slide, Ankit. So the timeline and implementation of these milestones, currently the government is trying to finalize the service providers, the aggregated. So they have already come out with the aggregated requirements of the service providers. Those validations are in place, and they are in the course of finalizing these service providers, which are going to act as the ASPs here. The data dictionary and full legislation rollout is planned in this month, or maybe in the coming months pretty soon. There will be changes which will actually happen in the legislation, which has already come into place. Maybe in the next slide, I will be talking about that. Full implementation of e-invoicing, it is not happening now, but it will actually happen from July 2026. One more announcement that they've made specifically is that there will be, in one of the FAQs, that it will be a phased rollout and not a complete rollout from July. So what will be the phase, what will be the cutoff, we would be hearing from them shortly. But the due date, or the D day, is July 2026. So maybe the requirement which they've actually come out very clearly is that all the business to business, which is your B2B invoices, and business to government transaction, regardless of VAT registration. So the question here, regardless of VAT registration, I'll come to it, will be mandatorily covered in the scope of e-invoicing. So you don't have to be VAT registered to comply with e-invoicing. So whoever is not VAT registered will also get covered as part of it, for all the B2B and B2G invoices. So this is a complete change from maybe the other location that we've been, tracking, as in the countries that we track. The requirement goes that they have to be registered to at least comply with e-invoicing. Here, even if you're not registered, you are still supposed to comply. On next slide. So here, like I did mention, the federal decree, which is 18 of 2022, was amended specifically to bring in line electronic invoice as a valid document. They've added new definitions of electronic invoice systems, electronic invoices as tax invoice, and electronic credit notes. So what is electronic invoice? It is basically an exchange of invoice document between supplier and buyer in an integrated electronic format. So it is basically you're transmitting the data, format, and through an automatic or electronic processing. So what are the key functions that is requires? E-invoice needs to be created with the correct structure. E-invoice needs to be transferred from the seller system to the buyer system. So uh, inclusion of e-invoice under tax invoice and tax credit note existing definitions, and an e-invoice is needed to even for your input VAT recovery. So um, all these have been amended in the law. And maybe going to the next slide. So the mandatory requirements that we are referring to is that e-invoice entails the structure, which is from transmission and retention of invoice, like I did mention. This will happen through an XML or a JSON format. A mandatory use of standardization of scheme, which is universal business language, or people invoice standard. Now, um, or you would ask me that what is a people invoice system? It is basically a pan-Europe public procurement online network. This is more popularly used in European transactions. It's an international network which is designed for exchange of electronic documents between business and public entities. It was originally, in Europe, started there in Europe, and now it's globally utilized to facilitate any e-procurement or any e-invoicing. Now, and the second question would be that if I am exchanging the data, will it be real time or will there be a time lag? At least the FAQs are saying that it will be a real time submission of data and receive of data, not just between buyer and seller, but also through the FTA. So it will be the ASP would at least initiate these exchanges between the buyer and seller as well as the FTA for the e-billing platform. Now the question comes in is that because I am generating invoices on a PDF or a JPEG format or maybe some paper format, will this be considered as a valid invoice? The answer is no, a clear cut no. Next question here. So do you generate paper invoices? The answer is, it is because the VAT laws still mandate to, generate those invoices and archive those invoices. They will be generated, but the way of exchanging of your data has now been prescribed. So so the question now comes in is that, can we start now or do we have to wait till 2026 June or July? The answer is, if you have an ASP identified, and you are able to map your transactions in the way we will just talk about it, you can even start now, but the only missing piece will be that your data will not be shared with the FTA. The data, the invoices that you will generate will go from you to the buyer, and the buyer will acknowledge and finalize the same. So the answer is yes, and the FAQ is also saying the same thing in line. You can start the same. Like I mentioned, it will go in phases. So some countries go in phases with the turnover limits. Some countries go with SSE or the type of taxpayers. So we will wait and wait for those clarifications to come in. Question: do I need to affix any QR code? The answer is no. There is no QR code to be attached, at least to the invoice. It is only exchange of data. Does the data needs to be in Arabic? Exchange of data needs to be Arabic. The answer is no. It is not mandatory to be in Arabic. So you can still continue to maintain that in English as well. To the next slide. So maybe whatever I've spoken about, pictorially representing, and how these e-invoicing transaction processing will happen. So if you look at the e-invoice user, which is a supplier, it could be you specifically as a company who's trying to send this data from the corner one, which is basically the supplier who submits this e-invoice data in the agreed format. So there is a specified agreed format as per the ASP. You will send the same and transmit it to the ASP specifically. ASP will now validate your e-invoice data, which it has received from the supplier. We'll convert this the data received into the standard e-invoice XML format, and then transmit this e-invoice XML format to the buyer's UAE ASP. So there will be an exchange of data between buyer and seller. And in parallel, it will also send a tax data document to the FTA, which is corner 5, which is on the right hand side. Now, if you look at that data, when as a seller, it goes to an ASP processes it and then gives it to FTA and goes to the buyer. What does the buyer do? Upon receiving this data, buyer will try and see that, is this valid? Are the things agreed? Are the things in line with what we've discussed? If the validation is right, it will say yes. and send this data again to the FTA. So there'll be data which will go from the seller's ASP as well as the buyer's ASP to the FTA. There'll be a matching between them, and the one that is successfully matched, the data will come directly to the receiver, who is again, which is the seller, which is corner one, who will validate and issue the invoice to the buyer in their own format. So there is a flow and exchange of data which is happening. So the data from your ERP would get generated and go directly into the ASP. How will this happen? It could go through APIs, it could be SFTP or any other modes that these data can be transmitted. So next slide. Uh, yeah. So what all e-invoices will get impacted? It is your standard tax invoice, which is basically having the mandatory and commonly used optional fields. Suppliers reverse charge mechanism will also have some additional data to be included. Your zero rated supplies, your deemed supplies, your disclosed agent billing, summary tax invoices, continuous supply, supplying invoicing through trade notices, and so on and so forth, including your self-billing or self-billing tax credit notes, including a disclosed agent tax credit notes, will get covered, and your standard tax credit notes will also get covered through your e-invoicing. So e-invoicing, maybe a lot of people will be in different countries, that I do understand. It may vary from what maybe those countries are actually following today. So this invoice is more, taken from what the Europe is following. So it's an exchange of data between to buyer and seller, and also the government, which is the FTA. So that's a three-way exchange of data that is going to happen, and that is what the pint AE or the people way of exchange, which actually the is being introduced. So to the next slide. So, what, now the question will come in that what is the data that I would require? So, as per a standard tax e-invoice, your minimum fields that you need to have in your system are, at least 50 of them here. Now, invoice details, sellers details, buyer details, document details, tax breakdown, and invoice line item. Now, the larger issue is that when we look at the data dictionary that they have shared here, the 15 highlighted fields are the mandatory fields which the people system is actually requesting that they need. But somehow this was not covered as part of the UAE VAT law. So what is the next steps for the for the business now is that look at the fields which have been highlighted here. Try and see if your system has these things covered or are they missing. Try and check if there is any conflicts or issues with the existing fields on the data dictionary. Any industry specific data elements, maybe if you would want to represent it specifically, you may want to take a look at that. Your HSN codes, your classification, service codes, anything that is being proposed maybe as an optional field earlier, you may want to try and look at it, because now it is being mandated and may be required later in the invoicing program. So maybe you may want to also look at whether your HSN, which you are currently classifying, is it 4 digit, 6 digit, or 8 digit, and maybe try to reform that accordingly, and foresee any potential problems of reporting, any of these specific transactions, maybe case to case basis, practically, and from privacy perspective as well. Can that be covered as part of the invoicing if it is a B2B or a B2G transaction? Clearly, the FAQ and the document that they've released says that it is currently not applicable to any of your B2C transactions, and the B2C transactions will be kept out of the e-invoicing bit. Next slide. Similarly, if while this was for standard invoice, same thing is applicable for the commercial invoice as well. So same data points. It's only that for commercial invoicing, they are requesting for 49 data points. Now, next slide, Ankit. So what is required from the organizational readiness and change management here? The first thing first things first is that conduct a comprehensive audit of your existing invoicing process and how is your data flowing. Is it having all the data points as covered earlier, or are we missing any data? Do we need to reform your ERP to capture those data so that it actually is captured in the report which is now being sent or maybe extracted through an API? So that's the first things first. Second is select and implement a certified people ready invoicing solution through an accredited ASP. Maybe a good news that I would want to share is that we are trying to maybe accredit ourselves with one of the synergies as an ASP. Hopefully we should come out with our offerings and maybe we will be able to talk about it in detail. If any of you would want to look at it or have a demo of that, you may want to reach out to us personally. We would be happy to talk about that. Third is developing a target training program, because your finance, your tax teams, your IT personnel, everybody will have to be trained that how these data is going to flow and how is this exchange going to happen. Because now if there is an invoice which you have printed, it will first be a not valid document if it is not going through the valid invoice or exchange. And on the other side, when we are looking at it, is whether it is going through maybe a document, then the input tax or the VAT credit that the buyer is trying to take will also get invalidated. So it has a two-edged sword. There will be a penalty on you as well, and maybe the penalty on the buyer, who's using the VAT credit. So a training program will have to be taken that all your documentations are in place. Execute parallel pilot runs. In fact, there will be some pilot projects which will come through, and they will be launching soon, as and the FTA has mentioned that there will be some pilot projects with the PPALs, which is the ASPs, and with some of the businesses who would want to volunteer and maybe come and take that up. So that would come through. Some digital signature validations and maybe exception handling will also be have to taken in, and maybe establish some cross-functional governance to learn how these compliances will now also apply or affect your corporate taxes or maybe transfer pricing or any of the other regulations which are being covered. So it's not just e-invoicing for your VAT, but e-invoicing would now affect the other regulations as well. So next slide. So maybe I would pass the forum on to Ankit to take up the recent publication. Any questions that you have, you may want to post in the Q&A box or in your chat box. Maybe I'll try and reply there. And maybe for the time that comes up, maybe we can actually do that later on as well. Over to you, Ankit.
Thanks, Sanjay, on the detailed explanation for e-invoicing. I think that's the topic for which everyone is waiting in the UAE market to probably be aware of. So while we don't have much as on date probably to detail out in e-invoicing, but yes, the primary steps to be taken by business have been explained in detail by Sanjay. So now while there are a couple of public clarifications which have been issued by the FTA for the business in UAE, we have covered the ones which would directly impact the majority of business in UAE, starting with the one for the cryptocurrency mining. While everyone would have knowledge on what is cryptocurrency mining and so on, and obviously people are there in the market to to help you to get money out of this, but there are some specific provisions which have been explained in this public clarification that if you do it for your own self, then that mining is is not taxable. But if you're doing it for someone else, so assuming for the sake of discussion, Sanjay is probably having his own cryptocurrency mining setup where he's doing it for himself and for customers in UAE and outside UAE, then the work that he's doing for himself would not be considered as a taxable supply and would be considered out of scope, so on which there is no VAT implications. But the credit pertaining to the portion that he has done for himself would not be recoverable. Second portion is while he's doing for someone else, where the customer is in UAE, then that would be considered as a standard supply and a 5% VAT has to be levied. Where the customer is outside UAE, then a 0% needs to be levied. Further, if there is someone in the UAE who is receiving those support from a vendor located outside UAE, then the recipient of the service who is in UAE would be liable to pay reverse charge and also follow the related compliance mentioned in the VAT law. So again, specifically coming on to the input, if there is something which is done for self, the VAT on that cannot be recovered, and that needs to be borne in mind. So given this background, we have probably given certain benchmarks to establish that what could be the documentation that can be maintained so as to establish that what is for self, what is for others. So you should probably prefer having contracts or service agreements specifying the mining arrangement so that it becomes clear for the authorities that for whom you are doing, what is the quantum, and so on. For the supplies, which are considered to be taxable meaning at 5 or 0, you should be having tax invoice in place. Then that again should be as per the VAT law. There cannot be non-compliance having in that. Further, you need to substantiate by way of documents, agreements, email exchanges that the recipient or the supply on which you have charged 0, that the customer is located outside UAE. Only then you will be able to claim a 0% tax rate on those supplies, not otherwise. So this is on a very high level on the cryptocurrency mining from a VAT perspective. Now coming to the next one, which is on Swift messages, which is primarily for the financial institutions in UAE, where it typically says that the bank in UAE would be receiving support from foreign banks or other banks located in UAE, and which could have a good number of transactions on daily basis, and for which there cannot be a tax invoice or a document issued by the foreign bank to the UAE bank on a daily basis or even on a monthly basis. So this public clarification of which is VAT P041 specifically or categorically states that the Swift messages which have been issued or shared by the foreign bank would be considered as a tax invoice for reverse charge mechanism purposes or charging VAT or for the reporting purposes. While they have given this benefit, but that benefit comes with certain specific details to be appearing on the Swift message, which have been covered in the next slide. So if that has been appearing in the Swift message, then there is no obligation on the banks and financial institutions in UAE to issue a self invoice. But if that is not appearing, then there is an obligation to issue a self invoice, and which should be as per the tax invoice regulations provided in the UAE VAT law, and so on. So here the Swift message should specifically contain these details which have been mentioned here. That is, the name and address of the foreign bank or the foreign supplier should be mentioned, the recipient's name and address, the transaction date and the unique reference date, and the description for stating that this is the fee charged for a Swift message and the amount charged and the currency used. So basis these details, a taxpayer will be able to report that details in the ASIM section in box 3 of the return, and which also would be mentioned in the backup working that they would maintain for the ASIM transactions. So if these details are available in the Swift message, no requirement or no mandate on the financial institutions to issue a self invoice. Going ahead, there is another public clarification which talks about how to value barter transactions. So for barter transactions, I think it's a well settled concept from the time or from the ages businesses are going on across the globe, that if there is something which is exchanged in return for a supply made, that supply has to be valued based on certain methodologies, and that methodologies are again common for any indirect tax law across the globe. So there are 3 options, 3 ways in which the valuation can be done. The 3 methods have been prescribed. The first one is the total supply of a barter, the total value of a barter supply would be the monetary consideration plus market value of non-monetary value, non-monetary consideration, to be seen. So if that is available, then you could go ahead with this option. And again, there is even an explanation given that what is the market value. Market value is defined as the arm's length price that the supply would fetch in the UAE region if the same is done with someone else or some unrelated party. So again, while we are speaking or while we are discussing the UAE VAT law, the concepts even which are there in the transfer pricing law across the globe, that is on the arm's length, has a role to play even in the valuation for the supplies made in UAE from a barter perspective. So if there is no identical supply which is there in the region or for that particular tax supply, then the supplier could consider an identical supply made at the same time under the same conditions to determine the value of the non-monetary consideration, and basis which they could consider the value of monetary and the identical and the other supplies value basis this method. So if that is also not available, then in the worst case scenario, the standard option given that you could consider the replacement cost of those services or of those services specifically to determine the value of the consideration. So if the two options explained earlier are not available, then the last option is what is the cost incurred to provide that service could be considered. And again, these documents or these values could be coming from the quotations that you would receive from the supplier for such sort of services, probably during around the same time. So while we have been explaining the provisions which have been given in the public clarification or in the e-invoicing section from the documents released by the Ministry of Finance, we have even given a link here to the public clarification to those specific documents, so that if anyone has probably that eagerness or to that curiosity to probably read in detail that how it is drafted or what is written, then the respective individual can click on the link given here to read that in detail and obtain knowledge. Then what is the documentation to be followed? So again, both the parties have to be mindful on these, because the documentation or the compliances are mandatory in UAE for every single transaction. There cannot be any miss which can be done by the recipient or the supplier. So here, again, this is something which has been probably known to the taxpayers across the globe, that you should be having signed agreements, contracts which would talk about what is the valuation, what is the supply, what is being exchanged, what is the quantity, and so on. Maintain detailed valuation, maintain detailed calculations, which could be supported by some workings that have been would have been prepared by the supplier. Ensure that there is tax invoice until the time e-invoicing is made mandatory, which shows the value of monetary and non-monetary monetary and non-monetary consideration in the format prescribed by UAE VAT law. All this comes into play only during the time when you have a refund position, or during the time when there is a department audit being conducted on the taxpayers. So we have been generally observing that during the refund, a lot of questionings are being done by the authorities, which we have covered in the ensuing slides. That to what extent authorities are probably looking to verify the data or the transactions of taxpayers who are carrying out business in UAE and claiming a refund of the input tax credit which is unused. Going ahead, there is a public clarification which talks about the component which is charged by the suppliers relating to the making service. So here it typically says that if the main supply of supplying gold, diamonds, and the precious stones and this making service is one single supply, then it will consider or it will assume the character of the main supply, that is supply of goods and diamond, and hence the entire value of the supply would be under reverse charge, wherein the person purchasing the gold would be liable to pay VAT on the particular transaction. Again, here, when the RCM applies, in which scenarios RCM applies, what are the conditions to be fulfilled, has been explained in detail in the earlier public clarification which have been issued in that regard. So hence, we are not going into detail on that perspective. While the supplier, has made a bifurcation or has a contract, which clearly explicits or, which clearly mentions the value for supply of goods and the value for making charges, then the position, can be followed differently, or the approach can be, different. For the supply of goods, for the supply of gold, the RCM process can be followed, and for the making charges, the normal VAT treatment, which could be either 5 or 0, depending upon, who's the recipient or who's the customer, basis which, the 5% or 0% position can be adopted. Again, here, so yeah, so this is on, gold and diamond related public clarification, which is come specifically for the component of making service. So now coming to the probably I think the most talked about, or the most impactful public clarification which has been released I think 2 weeks back on the consent services. So while there was certain clarity earlier on how the transactions made from vendors located outside UAE has to be considered, now there is detailed clarity on within what time the payment has been made, what process has to be followed in terms of documentation. If there is no specific invoice issued by the vendor, then what needs to be done, so on and so forth. So the concerned services, the word is probably not known to the general businesses in general, but this typically means the import or the procurement of services made from vendors outside UAE. That basically means again that vendors should not be VAT registered. There are businesses who are having an address outside UAE, but they are registered for VAT basis the specific provisions applicable to them considering their business. So in which case the concerned services when they are made by a supplier outside UAE, those would be taxable only when the place of supply is deemed to be within the UAE, and that would be taxed if had they been provided locally in UAE, they would have been taxable. So if there is a supply made by a supplier in UAE and that is considered to be exempt as per the VAT law, and if we are receiving such a service from a vendor located outside UAE, then the tax position remains the same. It will not undergo a change, and hence there would be no liability on the recipient to make a reverse charge application on those services or those procurement. Now, after giving brief background on what is concerned services, we'll just probably for the sake of understanding of the audience, we'll probably just explain where is the reporting required in the return and what is the taxability. So when a recipient or when a taxpayer in UAE receives concerned services from a vendor located outside UAE who is not registered, there is a 5% VAT liability which is on the recipient to report and recover. So here the crucial point for everyone is that while there is a reporting required or while there is an obligation on the recipient to charge or to report 5%, there is no liability to pay that value as such, because in the same return, where you are reporting the VAT liability, the same can be recovered in box 10, and because of which it's a mere entry as a liability and a recoverability in the return. Going ahead, coming to the point, so going ahead, now we talk on the documentation. So this public clarification, has specifically mentioned that if there is a invoice issued by the vendor which says or which states the supplier's name, address, recipient's name, address, the date of invoice has been mentioned, the service description has been mentioned, the value of the supply made is mentioned, and the payment terms have been mentioned, then there is no need to issue a tax invoice or a self-tax invoice by the recipient of service. This again is very specifically for services, not for goods. So if there is an invoice which has been validly issued or which contains a prescribed particular as mentioned, then that document can be followed for the reporting purposes in the VAT return, and no need for issuing a self-tax invoice or a tax invoice as per UAE VAT law. But if those conditions are not fulfilled, then there is a requirement coming in to issue a tax invoice. Now, if there is a mandate to issue a tax invoice as per UAE VAT law, all the principle or all the provisions as applicable for issuing a tax invoice in relation to a supply has to be followed. So I'm just quickly giving a few pointers or few what should I say, checkpoints which have to be followed while you are looking at this. That from the date of supply, the tax invoice or the self tax invoice has to be issued within 14 days. All the prescribed particulars for tax invoice have to be followed, like the name, address, and TRN, name and address of the supplier, name, address of the recipient, description, the taxable value, tax, the foreign currencies, name, value, the AD conversion, which is to be used as per, which is to be converted from the foreign currency to the AD using the exchange rate published by the Central Bank of UAE on a daily basis. For USD, it is pegged at 3.6725. But for currencies other than USD, the exchange rate published by Central Bank of UAE on a daily basis has to be followed. Now, the catch does not stop here. Adding to the problem, in case you have probably procurement made for some certain subscription, or there are multiple expenditures done by the employees while they are staying outside UAE for business purposes, all the expenses for which they are claiming reimbursements or which have been incurred by the credit card, even for those, if there are valid document substantiating or mentioning the relevant details as explained in this slide, then for those there is no need to issue a self-tax invoice or a tax invoice. If there are no relevant details appearing in the document issued, then for every transaction there is a need to issue a tax invoice. Again, looking at this, all the business would have to probably understand that what all types of procurements are made, whether every procurement has a supporting document. If yes, no problem. If yes, start the process of educating the team of obtaining vendors invoices from the vendors when they are going out of UAE, so that there is no burden on the accounting team or the tax team to probably reach to the stage where they have to issue a self-tax invoice. Again, here the business have to ensure that for every expenditure which is in foreign currency and for which there is no tax for which there is no invoice issued by the vendors, for every transaction there has to be a self invoice. Now, looking at the way in which authorities are making the changes in the VAT law in the review processes, it may not be late while they would ask for such self invoice or vendor invoices while the refund review happens for the taxpayers who are claiming refund. So this is on concern services. While we have explained the concepts in detail in the previous two slides, going ahead, there is further conditions which have been attached to the recovery of input tax credit. The first, obviously, we have discussed at length that the recipient of business in UAE should have a documentary evidence, that is either the supplier invoice or a document which would state those details as explained. Second, the most or the difficult situation is that now even there is a mandate to ensure that the payments to foreign vendors is paid within 6 months. Earlier to this public clarification, there was no mention in the law for a prescribed timeline, and hence there was no mandate to keep a record of the payment date. Now even that becomes a mandate on the businesses. One, to ensure that the payment is happening within 180 days from the date of invoice. Second, to even have the data maintained in the books or in the ERP systems and even in the VAT workings, so that there is no questions, which are probably coming 4 years down the line when there is a department audit being conducted, and the data collection has not happened probably from the time this public clarification comes into play. So while there is no date on which there's no effective date mentioned in the public clarification, hence it is safe to assume the next month from which this public clarification was issued, this become mandatory. So that is from the 1st of June 2025, businesses have to ensure that this is to be followed, that there has to be a document either issued by the vendor, if that is their tick off. If there is no document, maintain or issue a self invoice for the details to be appearing on the invoice. Ensure the payment is made within 180 days. Ensure there are contracts between the vendor and the recipient in UAE, so that there is clear understanding of the transactions or the procurements made, which would substantiate that it is for the business and not for any personal consumption of the employee. So while we have explained, we have also covered those things in our presentation, that either the original invoice or alternate documentation, self invoice. In case which I have again mentioned, like there is a public clarification on Swift message. If there is probably certain transactions which are happening, and you have approval from the FTA to not issue issue a self invoice or have certain alternate document, then in which case you will be allowed to not issue a self invoice. Otherwise, in general, 99% of the cases the vendor's invoice or the self invoice has to be there as a proof for procurement. The proof of payment, that is either the bank receipt or the payment invoice which company would issue, again the contracts or engagement letters. So this is on the documentation bit, which has to be maintained from a governance perspective and a return filing perspective. Again, there could be situations while the businesses may know that there is expenditure incurred from vendors located outside UAE, but the accounting team may not have it. Hence, from that perspective, the accounting and the books should be reconciled at the time of filing returns. If that is not possible, probably at the year end, to ensure that all the expenses which are reported as a reverse charge procurement or as a procurement made from a vendor outside UAE are appearing in the books, and vice versa, to ensure that the books and the returns are matching, so that there is no reconciliation which is required from a VAT perspective. Further, the same could even help to see if there are any omission made, to include that in the VAT return for the future periods. Again, while this could be this would be considered as a non-compliance from a VAT perspective, because the loss is in respect of import of services. The date of supply from a VAT perspective is the date of invoice of the vendor. So while the procurement may have been made in probably June 24, if it gets detected at the time of conducting the statutory audit, probably 9 months later, which could be somewhere back in probably Jan 25, and that has been identified. So while it gets reported in the VAT return due for that particular month, but again there is an exposure to penalty because of the delay in reporting the procurement made from a vendor outside UAE. And last, again, the records have to be maintained for a period of 5 years, to ensure that if there is an audit conducted by the FTA, the documents are there in place to substantiate the reporting done in the returns. So while these public clarification have given clarity to businesses in UAE, to advisors in UAE, to accounting teams, to tax teams, but there is a lot of compliance burden which has been increased on account of this. So while it's clearing the approach to be followed, a lot of efforts have to be taken up to ensure that one, books and returns are matching. Second, documentation, agreements, engagement letters, emails are there to ensure that the positions, the businesses are, opting as a 5% or a 0%, depending upon the type of transactions, are there in place so that there are no questions raised by first by the business, second by the internal auditor, third by the statutory auditor, and fourth by the department authorities. So there are a lot of stakeholders, which come into play for every tax. It's just not, VAT, which is probably, the showstopper in today's time. But even the reportings done to other authorities, are important in today's time, so as to ensure that all reportings are, matching. Going ahead, we are just, probably quickly looking at the situation in which reconsideration and waiver applications are to be filed, because a lot of penalties are being levied on the taxpayers, either for delay in registration, or for wrong return filing, or for late payment, or for uh, uh, wrong invoices issued which are being identified by the authorities at the time of audit. So there is a process, and for which there is even guides available on the portal, which says that how it has to be uh, uh, filed on the VAT portal, what exactly has to be given, the supporting documents, and so on. Uh, while the portal says, or while the guide says that the application for reconsideration has to be filed within 20 days from the date the penalty has been levied. Hence, it becomes important if you have been levied a penalty, and if it's correct, you pay up and close. If not, then ensure that you are filing a reconsideration application from the prescribed date with the supporting documents and the relevant law extracts, so that the authorities review and probably decide on the reconsideration application file. While it's not so very easy to get the penalty reconsidered, or to get it waived or to get it reduced, but yes, the FTA has, in many cases, which we have seen in the past, in the last I would say 7 years, has reversed the entire penalties. There have been situations where we have been following up with the authorities over a period of 9 months, but yes, a good big amount of penalties have been reversed, given the detail in given the manner in which things have been detailed or explained to the authorities for the penalties that have been levied on the taxpayers. Uh, yes, and that is that has been generally because of the situations which are outside the control of the taxpayers. So people or the audience would be thinking that what is the difference between a reconsideration and a waiver. Reconsideration is something that the taxpayers know that the penalty has to be levied, but the taxpayers want if the authorities can consider reducing it or reversing the entire one. While in the waiver, they know that this should not be levied, and is purely because of certain acts which are beyond the control. Examples are the first, it is first time the taxpayer is in UAE and carrying out such a compliance. Second could be because of ill health of the family member or the consultant, and so on. And last, certain issues on the portal. So those are the circumstances in which waiver application can be made. Now going ahead, there are certain changes in the law which is allowing the authorities to adjust the penalties from the recoverable tax. Going ahead, there are certain procedural changes which have come on the portal, which we'll quickly discuss given the short time that we have. There is a new thing which has come up on the portal, that the business activity has to be updated. Once this gets once this activity is done, it gets added to the list which is appearing on the AMTP, or the amount taxable person. Hence, it is mandatory to ensure that all the details which are inputted here are correct. If those are not correct, and separate application has to be made for correcting it. Further, there are a lot of issues which taxpayers are currently facing on account of uh, corporate tax registration or amendments which are pending with the authorities for review. Those are being listed here, and certain issues which they are facing at the time of making the VAT registration like the fields are locked, because of which the entries cannot be made, for which the taxpayers could write detailed emails with to the authorities over write the issue over email, so that there is sufficient record to substantiate that there is no fault of the assessee or the taxpayer while doing that process. Further, at the time of refund processing, uh, in the last probably 6-8 months, we have been seeing that the authorities are asking for payment supporting document, trade license, policies for medical, mobile, and so on. This is all being done by the authorities to see whether the compliance is being done by the taxpayers or not for the payment, updation, amendments on the portal, and so on. So with this, I probably keep a hard stop, for the attendees to probably ask any questions, if which have probably come to them.
So Ankit, I answered most of the questions. I think there's only one which is a little we may want to just take a look at in the question. So maybe the question is on, I think, e-invoicing on foreign reimbursements. If you are raising an invoice, like we mentioned that all the invoices would, whether it is B2B or B2G, will be part of the invoicing module. A lot of questions actually come on this regard itself, and therefore maybe just to reiterate is that if you're raising an invoice for any of this, and even if you're not registered, the same will have to be reported via e-invoice. E-invoice is not a new norm. It is basically, if you are raising an invoice now, even if you're not registered, you'll have to at least share the data with the FTA and with the buyer. Now, since your buyer is not registered and maybe now not part of the UAE territory, what the system is going to do, it is going to allot a dummy endpoint which will be provided to it in the system itself. The exchange of document will happen via this, will not happen via the people network, but it will happen as an offline module. So as a seller, you will have to send the invoice via an email to your buyer, and maybe report the same to the FTA, in your maybe returns wherever applicable. And whatever you've been doing so far will continue. It's just the reporting of e-invoice or exchange of e-invoice, how this is going to happen is what is the process. So maybe to reiterate, e-invoicing is not a new norm. It is just that to validate your document, you will have to exchange all the data with the FTA and with your buyer. So if your buyer is accepting everything, it will become a finality. It will come to a finality, and it will also report the same to FTA. So FTA will now continue to have a data interchange and a live review of whatever data is being exchanged on the invoice. So maybe do you want to answer this question? Where can we study about Dubai VAT? The FTA is pretty much open enough. Whoever is asking this question, you would be able to take that up. I take the suggestion that we will try and take some master classes also on this wherever required. You may want to attend them as well in future.
So while I think for this Sanjay answered, there is the law and the regulations given, and there are public clarification which have been issued by the FTA from 2018 till date. And every day we are also in the learning phase. We are also not experts. While we are considered to be experts, we are also enhancing our knowledge on a daily basis, given the changes which are coming to public clarification through portal and so on. So it's a continuous learning process for everyone, but the base document for everyone in the UAE region, or who are probably looking at VAT law, is the decree law and the executive regulations and the public clarification which have been issued. Yes.
And with that, I would like to thank our speakers Sanjay and Ankit for sharing their valuable insights on the subject. And I'm sure listeners too have found it relevant. Now, dear participants, if you still have any more questions, we welcome you to reach out to us at thinknext@nextdime.com, and our team would be happy to respond offline. We welcome your feedback on today's presentation as well. I think with time running out and over, thank you everyone for joining us and have a great day. We look forward to your comments.